statement show the amount of money being transferred in and out of a business and how it affects your liquidity. And it is a strong indicator of financial health. It's really a reflection of all the business systems you've set up, such as correctly pricing your products, keeping up with payables, receivables, how you're handling your debt service, and really your ability to pay your employees and yourself. One of the most important things to know is that cash flow is not profit. And in my time at the SBDC, this was one of the biggest issues that I noticed when people were coming in with financial cash flow problems. They would receive a check, a very large check. It could be for whatever farm commodity they were selling. It could be for a non-farm commodity. I have a lot of construction people we worked with that would get large checks for a job or for a product, and they would just spend it all. They wouldn't look at it and say, well, a portion of that was my cost of goods sold, a portion of that should go to overhead, a portion of that should go to the labor that I fronted. They would put it in the bank and they would spend it and do that every time. And we're having very difficult times recovering. So you really need to understand one of the main things is that cash flow, that money coming in and the money that is not profit. That's not what it is. And so learning that is a very important tool in your business. And I'm sorry, if anybody has a question, there is a question and answer section where you guys can type a question and I can answer it. So please feel free to do that so that I make sure that I'm answering the things that you guys might want to talk about. So why understanding your cash flow is important? Why is it important, right? So you guys in businesses, you have to be able to pay your bills. You have to be able to pay yourself. It's very helpful to be able to show value of your business, especially if you're going to be seeking financing at some point or credit lines. It does show them that you can make money and that the business does have a value to it. And really, it does allow or help you to be able to plan for expansions or new equipment purchases, either by loans, being able to get a loan, or paying it by cash. And so it's really helpful to understand, why it's important to have that cash flowing very well. So here's where we're going to spend a little time talking about cash flow. So in farm businesses or ag businesses, food businesses, and I honestly, my time at the SBDC, most businesses have a seasonality to them or something that affects their cycle, their cash flow cycle. And so I kind of wanted to look at what is in your control and what is not. Because there are some things that you cannot control. As much as you try, they're just out of your control, and you have to learn how to navigate through those things or make sure the business is solid financially to be able to push through some of those kinds of things. And so let's kind of look at the things, and I say to a point, because even some of these things sometimes fall out of your control. So let's talk about capacity for a second. Your ability to produce the products and services that you sell. So I'm going to go back to my SBDC days in this because that's when I did a lot of guidance on this particular topic. If somebody came in and they said to me, I know how to make this, and I'm going to use this one example, this beautiful piece of jewelry, and they had it with them, and it was a very nice piece of jewelry. And they wanted to quit their job and they wanted to make a living selling this particular style of jewelry or other styles like it. And so when we started talking, I said, well, how long does it take you to make that piece that you brought in? And the answer was, well, it could be 2 weeks to a month. And I said, how much are you going to sell it for? And the answer was, well, I can't sell it for more than $50. And so right there's the issue. Because if it takes you a month to make something you only sell for $50, you don't have a very good capacity of making money. And so one of the things and this really affects your cash flow, obviously. So one of the things, and again, I don't know the audience here if there's Startups, if you got existing businesses, but it kind of can be looked at for existing businesses, revisiting your capacity, because that does change. And for startups, really learning what your capacity is going to be. And so if you can't produce enough that will make money for you, that right there stops the whole process and the whole cash flow from running well. And one of the main things that the SBDC can assist with is kind of doing some cash flow projecting. And so in order to do that, we have to understand your capacity. And certain things you can only make so many of, because they either take too much time to make, or it's very hard to get certain aspects or pieces of it, whatever it is, or ingredients for it, whatever it is. And so if you cannot figure out your capacity or a correct capacity that you need, you're going to have a very difficult time cash flowing the business, especially if your business is only selling a certain amount of items. So if you're not diversified beyond one item or two items or whatever it might be, you're putting everything you have on this one or two item product or service, whatever it is you're selling. And if it's not priced right and you can't produce the correct amount, your cash flow is never going to work. So that's something that a lot of people don't think about, is what is my capacity to make the product? And is it even enough to even make this thing cash flow? And so even in my own business, a lot of times when we have an idea for something, we create a projection for it. We kind of mock up what it would look like. What does it look like if we were able to produce 100 items and sell it at this versus 200 items and sell it at this? What are our costs involved? And that's a very useful tool. There are times we've had ideas and we do that and it doesn't work. We can't make it work. We just can't, it just doesn't. And you kind of change the idea a little bit and then it works. So really think about your capacity and what you're able to produce. Services are especially difficult because there's only so many hours in a day. And service-based businesses, whatever it might be, become very difficult sometimes to cash flow because you only have so many hours in a day, and you're limited sometimes to how much per hour you can charge for many different reasons. And so that's a very important thing to look at. Second, your ability to obtain short-term credit lines. And so this is something I hear a lot, I heard a lot. I don't want debt, I don't want debt, I don't want debt, which I get. But when you're running a business, if you can't cash flow correctly for whatever reason, and there's reasons why, one I can think of off the top of my head is you are working with government, New York State, let's say you have a New York State contract. So you know the money is good, you're going to get paid, but they're telling you the terms of the contract are 90 days, but you have to deliver the item or product by a certain date. If you don't have the ability to kind of float that money forward, you lose out on opportunities as well. So kind of thinking along those lines. So what is your ability to get a short-term credit line, a revolving line? You know, some people have used credit cards. Revolving lines are a little easier to manage, but what is your ability to get one of those? And so one of the things when they look at kind of giving you these short-term credit line, the banks that you're working with, is your ability to cash flow. Like they're looking at that. Sometimes they'll ask for those reports. So that is in your control to a point. Again, some of this, your tax planning. This seems to be, I see a couple questions popping up here. Sorry. Okay, I see a question. So I see somebody is working with a food truck. So do you have a specific question? You can type that question. I'd be happy to do that for you. Just let me know. So tax planning properly. Do you have an accountant? Do you have a CPA? Like, what are you using for professional resources? I can tell you from experience, tax preparers, H&R Block, they are tax preparers. They take information that you bring, they put it into a form, they prepare it, and they send it in. That's not tax planning. That's just preparing a tax return. And so one of the things that you would want to do is make sure that you have professional resources lined up in whatever it is that you need. Each business kind of may have different needs. Usually, basically, most businesses would need an accountant and a lawyer, and then there could be other types of expertise that's needed. Just depends on your business. But not having a tax plan in place can affect your cash flow as well. And part of that is because you really need to understand how you spend money and what happens to that money. So if you, for example, let's say own a building and that building needs a roof put onto it, and it costs $10,000 to put the roof on the building. That is not necessarily expensible. It's a capital asset at that point, and you're improving it or keeping it, and it actually writes off as depreciation. So on one side, you spent $10,000, but on your tax side, it's not being written off fully as an expense. So you need to kind of start to understand how you're spending your money and how it affects your bottom line. So it's very different than business expenses are very different than your regular home expenses. They just write off very differently. So I'm going to tell you, it's very important to your cash flow, to that bottom line, to tax plan properly. We're going to talk a little bit here about controlling inventory. And so this is another spot where I've had a lot of people get into trouble, because when you buy inventory, you're tying up your cash. So you could buy a whole warehouse full of cardboard boxes that you need for something and think, oh my gosh, I got a great price on them, but I'm not going to use them till next summer. And so if that load of boxes cost you $30,000, your cash is gone. They're sitting, and you're not going to kind of receive the benefit of that for probably at least another year. And so sometimes you have to think through, is buying that really the smartest thing right now? Can I be without that cash at this moment? Do I really need those? Sometimes the answer is yes, because maybe you're not going to be able to get them, and that's part of your cash flows, that you have that budgeted in. I got to buy this thing. We have to store it till next summer, and maybe that's part of the plan. But there's other times that you have to say, I can't really afford to have all that stuff sitting in inventory right now. And so there are hard decisions there sometimes, and trying to figure out what's the best thing to do. If you're buying inventory that can spoil, how do you know when you're buying, if you're buying too much or not enough? And so that becomes difficult, especially in food businesses with certain items. And so I have worked with restaurants, food trucks, any food kind of places. I've worked with them in the past, and that was usually when they're struggling, one of the main things was controlling that inventory, the food costs, because they're buying too much. They're not looking at what they're selling versus what they're buying. They just buy a whole bunch of stuff. They put it in the cooler and hope that it sells, I guess. I don't know. And then it doesn't, and they have to throw it out. And so sometimes it's doubling your food costs by not being able to control that inventory. So next item I have here that you can kind of control is knowing your fixed versus variable costs. There's some expenses in your cash flow, in your business, that are fixed no matter what. It's the same amount no matter what. It's the same amount whether you make money, don't make money, sell something, don't sell something. You have that basic overhead of fixed costs. And a lot of times when I ask people what their fixed cost was, they didn't know. They didn't have an answer, and they weren't sure. And then you have the variable costs, which change based on what you're buying. And it's usually associated with the items that you're selling. So the more you're selling, the more you're buying, that kind of thing. And so being able to list those out separate, fixed versus variable, is very important. And that's very important actually in creating a projection and in pricing your product. So the other thing that you guys can control in a cash flow is negotiating your terms of payments for receivables and payables. So not a lot of people necessarily know they can do this or want to do this. They don't want to negotiate things, but if you know you have a government contract, we'll go back to the New York State concept, and you say, well, if I have to buy this raw material from this supplier to make these things to sell to New York State. I won't get paid for 90 days. There are times you can go to that supplier and say, hey, let me show you what I'm doing here. If you give me 90-day terms, you're going to, you're going to be paid because New York State's paying me. Here's the contract from New York State. Sometimes they'll say yes. Sometimes they'll say no, because maybe they already have the stuff sold. But there are times that I've negotiated terms for different things in different situations. And so know that, because that affects your bottom line and your cash flow. So if you bought that raw material and didn't talk or didn't negotiate, and that guy says you need to pay me in 21 days, you're not getting your money for 90. If you don't have that credit line in place where you could pull some money, pay him, maybe you pay a small amount of interest, but you benefited on the other side. How are you going to pay for that if you don't have cash on hand? And so that's a tool, negotiating your terms for payments and receivables. Sometimes the payments are harder, the money coming in on a contract, it goes by the contract date. But there's other times you're selling to a private business and you can also negotiate those terms. I'm sure many of you seen, like, sometimes they'll say, like, pay by this date, you get a discount. That's usually a sign to me that they're willing to negotiate. So if they're offering me a small amount off if I pay, sometimes I'll call them and say, hey, can we work out a different payment plan? I'll forego the discount, but can I get 30 extra days? Because, I may know that this is coming at me. And sometimes they say yes. Sometimes they don't. And then we work around that. So just know that you can negotiate terms. Sometimes person has to be willing to participate, but sometimes it doesn't hurt to ask. So always keep that in mind, because that, if you're given 30 days, but you don't receive for 90 days, that does affect your bottom line. And honestly, if you have employees, they want to be paid. They don't want to hear, well, no, I'm waiting for the contract to come in. That doesn't work. So you have to be able to float that sometimes. So next I have on here, learning to control your profit margins. So pricing correctly. Very important, especially if you're only selling a couple items. If you misprice your product and that's all you sell, I've seen it 6 months to a year, you're out of business. Maybe you have some cash reserves, but it goes. So it's very important. I have asked people when they come in, I used to say, why are you pricing your product at that price? Like, where did you get it from? And their response is, that's what my competition sells it for. And I said, do you know if your competition is making money? Because maybe they're not making money either, and they could be out of business in 6 months, but you're pricing your product based on what they're doing. You're both going to be out of business. And so what I always tell people is figure out what you need to price it for first. Maybe that's not what you're going to charge, but figure out what it needs to be. Like, what are all the components, the raw materials, the service, the labor, whatever it is that goes into it, and figure that out first before you just pull a price out of the air, because that's what so-and-so does. And believe it or not, I'm going to say a very good majority of the time, that's how people priced their products when they were coming in. So that's very important. Your profit margin. What do you need to make? And there are industry standards for some of these things. The SBDC has databases that they can actually access. So if it's a certain industry, if it's a restaurant, food trucks, farm, whatever it is you're selling, they can look it up and it will give you in general where you should be on certain things, right? So what should your profit margin be on the products you're selling? Is it 30%, 40%, 50%? It kind of gives you a gauge. And so that's a very good tool as well. And they can help you with those kinds of things. Next item, quality of the items you are selling. So that's in your control sometimes, to a point, right? So if you're trying to sell a quality item, and you always are known for selling the quality item, and all of a sudden you look and some of your items are not the quality they should be, what do you decide at that point? Do you put it out for sale and then have disappointed customers? Do you sell it at half price? Or do you pull it and not sell it at all to maintain your pricing levels? And those are the things sometimes you have to think about, is what are you selling? There are times I've walked up to a bench in our greenhouse and I look at it, and for whatever reason, it just didn't grow right, didn't look right. And there are sometimes I just remove it. It's just gone. It's just take the cut and move on. Because if you try to sell an item that people aren't used to seeing at your place, if you try to sell it on sale, you start changing their perception, and it changes what they're willing to pay. And so you don't want to do that. So sometimes you just cut your losses and move on. And so you do control, to a point, the quality of the items you're selling, again, to a point. So always consider like what you're turning out to the public. Is it what you want to sell? Because we all know, right? If you get a bad meal at a restaurant, you are telling everybody. You go online and you tell everybody. It gets out there. So maybe they had a bad night, somebody was in a bad mood or had a bad day, and they would have been better off telling that person to stay home, right? Or doing whatever. But that once that quality changes, it changes a lot of things, and it does affect your bottom line, your cash flow in the end, because you're not selling what you need to sell. You're selling a lot less, all because of one bad item that you turned out. And then yourself, I put the business owner on there because you can control yourself to a point, right? The things you're doing, the decisions you're making. So that is important to always consider yourself in the mix. How are you affecting your cash flow? All of these items above yourself, are you looking at them? Are you managing them? Are you taking care of them? Or are you more interested in just what you're doing and not in running the business? And this is always another issue that I encountered, is that people are very good at baking a pie. Best pie out there. Everybody says, you go to family meals, you should sell these, you should sell these, you should sell these, right? So you decide, I'm going to bake pies and I'm going to sell them, but you're not paying attention to anything else. You're making the good pie. It's not priced correctly. You can't make enough of them to make money. You're not, paying attention to all those other business related items. You just made the good pie. And so you have to include yourself in this, that if you want to start this business and you want to cash flow it correctly, you have to include yourself in there as kind of learning to control all of these other items in there. Taking a hobby and creating it into a business sometimes is very difficult for many reasons, because it's fun when it's a hobby, sometimes not as fun when it's a business. People walk into our greenhouse and they say, it must be fun to work here. And a lot of us laugh because, yes, we're outside, but it's very hard work. It's very, very time consuming. It's 7 days a week. I have staff there from 4 o'clock in the morning till 7 o'clock at night, if not longer, 7 days a week for months. And if they can't come in, if they get sick, it falls on you. Like is it fun all the time? No, it's not fun. It's not fun all the time. And so I have a lot of people who have come into the garden center and they'll ask, oh, can I talk to the owner? So I go out and talk to them. They're like, yes, I have a hobby greenhouse. I want to start a business like this. What do I need to do? And you just stand there and it's like, you can't even get it all into one sentence. So again, I'm not sure where the audience 100% is here, but just know that taking hobbies to business is difficult sometimes. And so you yourself have to kind of control that and figure out all these other things, because you want to run a business to make money. That's the bottom line, right? You wouldn't be doing it otherwise. You want to make money on your own. I always hear that. I don't want to work for somebody anymore. I want to work for myself. Well, if you're working for yourself, you now have to manage all the things that all of the management you worked for before took care of. So just kind of keep that in mind. Are there any questions on any of that anybody wants to type in? Good or good? Okay, so let's go on to the next slide here. So things not in your control. So we just talked about things that were in your control to a point. So if you're a seasonal business, if you're a farm business, even restaurants, food trucks, anything like that, weather, it's not in your control. It just is not. And so one of the things in this type of business, or these types of businesses, ag related, we'll call them, because ag related kind of encompasses quite a bit of things. Weather. how are you going to insulate yourself and your business against the weather? That's something that, because, and I say this, like, you may think I'm kind of going off here and there. This affects your bottom line, right? So you have a crop in the field, it rains every day. It's happened. There was a couple years ago, it rained every day in the month of July, just about every day. Fields were getting wet. There was mold all over everything. What do? You can't do anything, can't make it stop raining. So my particular business, we flood. It floods once in a while. You have to deal with that. Last year in May, if everybody remembers, it froze in May when the apple trees were in blossom. And it wasn't just like a light frost. It froze. It was down below 30 degrees. So there's things that are out of your control. So you need to set up systems, whether it be insurance, if it's farming, crop loss, or different ways you can sell your product should the weather inhibit your business. Because it's just, you can't win against it sometimes. Some years you just can't. And seasonality, every business, for the most part, non-ag, ag businesses that I've ever worked with do have some sense of seasonality, some more than others. People come and be like, no, I don't. And I said, well, let me see your sales month by month. So we look at the sales month by month and I go, there it is. You can see it, right? You'll say, oh, why are your sales lower in this month? Oh, because this happens. I said, then you do have seasonality. So when you create a financial projection, the biggest mistake you can make is taking yearly numbers, divide it by 12 and just putting them into a chart, because that is false. That's not how it works. And so figuring out your seasonality will be very helpful to your bottom line, because it allows you to focus on the times that people are very into buying your product, very heavily buying. Are you pricing stuff correctly during that time? The demand's higher, maybe the supply is not as good, so you want to make sure you're adjusting as need be. You go into the winter time, nobody's buying anything, or the money's down. You wanted to make sure you made that money when you needed to. Demand for your product is hard to control because people have to want to buy it. And so marketing falls into this, right? So you can market your product, you can put it out there, but there are times where people just don't want what you're selling for whatever reason. And I guess that kind of goes along, and we'll kind of discuss the social media trends. We'll skip over that other one for a second. So and I'm sure you've seen this, right? And again, I'm not promoting any lifestyle, anything, but I'm just saying you see these trends, right? Plant-based trend, vegan trend, don't eat dairy, don't eat eggs, don't eat red meat, eat red meat, right? This goes on all the time on social media. And so one viral kind of post about something you sell, not particularly you, but just an item you sell. So if it's milk related, now we're not drinking milk, that affects your bottom line. So how do you counteract social media trends? Because as each generation goes down, right, you have different age levels. More and more of the younger demographic are reliant on social media for their information. That's how they're being taught. So we have to really think about that, because it does affect our bottom line and the cash flow in our business. So the supply of raw materials, if applicable, because sometimes you do need certain things, and that ties into seasonality and that ties into weather. So if it's something, I don't know, I know honey sometimes can be that way. I know certain customers use things like that, or milk or butter or whatever it is. If you can't get it, you can't make your product. So if you're relying on somebody else's business to provide you with very specific raw materials that they then can't provide, that affects your bottom line. So if you've created a product that's very unique, but very reliant on these very unique raw materials, you have to be sure to diversify yourself with other things, because once that falls, then your whole cash flow tumbles because you can't get what you need. And so sometimes that's not in your control because it's somebody else's business. Something happened over there and you can't get it anywhere. So that's something that you really need to think about. How do I react if that supply goes dry? And I've seen this happen too. I've seen people they're their whole business is based on this product, and it's based on getting this one certain ingredient, and they can't get it, they don't have the product. And honestly, I had a couple banks reject loans for that type of product because they said, what if they can't get that? They're not going to be able to make the product, therefore not going to be able to make their loan payment. That's how they interpret it. So think about that and how you may need to diversify or find other suppliers for things before you're completely reliant on just one kind of source for something. And that kind of goes with the availability of components of products. Same thing. We just kind of discussed that. And then things that are not in your control, and people, I'm going to say this, but employees are not always in your control. Not that you all have employees, but eventually you may have one or two employees. But do you, and I mean this in the sense that you can control what they do while they're there, should they show up, should they continue their employment. And so if you have employees who are, I guess, you rely on to do very specific tasks, if they leave, if they get injured, whatever can happen to them, if they're gone, and that will affect your bottom line. So be sure in your business that you, again, big or small, whatever it is, that you know how to do everything. I do everything. I know how to do everything. My brother knows how to do everything. If somebody doesn't show up, we step in. We're on the line sometimes all summer long. It's not beneath us to do it, but we have other work to do. We're trying to sell and ship stuff and that kind of thing, but sometimes you have to do it. So employees are not always in your control. Just because when I used to work on business plans at the SBDC, I would say to people like, okay, you're opening a restaurant and you wrote in your business plan that it's going to be open 7 days a week from whatever, 11 in the morning till 10 at night. I said, who is filling all those hours? And they're like, oh, me. And I'm like, a bank's not going to believe that because you just said you're going to be open 7 days a week, all these hours. And you just told them your seating capacity is 100 people and you're going to do this all by yourself, cook, clean, wait staff, you know, that kind of thing. So banks pay attention to that kind of stuff. So just, if you're going to hire employees, just give it some thought. You may need them. I'm not saying you don't need them, but just make sure that you don't give too much autonomy to them that you don't know how to do yourself, because that can affect your bottom line if they leave. Excuse me. Is there any other questions at this time before I go to the next slide?
At this time, there aren't any, no.
Okay, thank you. Just want to make sure that if anybody has them, I don't miss them. Okay, so. All right, so we'll talk about some things that can increase your cash, like what you can do to improve it. And one of the biggest things that I saw is that people don't use bookkeeping systems. Always said it didn't matter what it was, just pick a system. You want to use an old ledger book, use a ledger book. You want to use an Excel spreadsheet, use that. You want to use QuickBooks, use it. And there's all kinds of other things out there. You really, if you're working with a CPA, as we talked about earlier, they would also guide you on the best bookkeeping system for you. And you need to stick to it because that is where you're going to get all your reporting from. That's what's going to help you keep track of things. That's what's going to show you if you're pricing correctly. And you don't want to wait until after the fact to figure out that, oops, I didn't do that right. You know, you don't want at the end of the year just be counting cash in a box and realize I didn't make enough money. So bookkeeping systems are very important to a business. I've had multiple people, again, want to start a business. I don't like doing that. Well, that's part of a business. And there are bookkeeping companies out there that do it for you. If that's your downfall and your weakness, identify it at the beginning and hire a bookkeeping company because it's going to save you money in the long run. And it's okay to do that. They're there. So that's very important. And that will help you because you'll be able to see right along what's going on. It allows you then to produce key financial reports, monthly, quarterly, however you need to look at them. Depends on your business. Depends on your business. So, and make sure you're kind of running those reports to look at them and understanding what they are. You have to have an interest in it. You are doing this because you want to make money. So you have to have an interest in how you're making money. Okay, that's very important. And I'm going to kind of tell you this is I was at the SBDC through COVID, and during those years, that year or two, they appointed all the SBDC offices to help businesses apply for all the assistance, the payroll protection program, the COVID loan, anything that was out there. We helped people apply for. And one of the biggest issues that there was that people did not have a bookkeeping system. They did not have correct tax returns. They had tax returns that showed no profits, no expenses. I go on and on about it, but they didn't get the money. There was businesses, some of the businesses that went out of business did not go out of business because of COVID 100%. Yes, their thing was shut down, but they also didn't have the proper documents that allowed them to get the money that would have kept them afloat. So it's very important to have that stuff. Who knew that was going to happen? But the businesses that were prepared were able to get the funds they needed to stay afloat and to keep moving forward. The ones that there were some that just couldn't, their bookkeeping was horrendous, their tax returns were no good, and they just couldn't get the money. So that's important. Developing additional sources of revenue for the off season isn't always 100% easy to do, not for everybody, but if there is an opportunity, you should sit down and think about what you can do in the off season. A lot of times, if there's partners in the business, sometimes one of them actually works a job, or does something else on the off season, drives a plow truck or different things like that. And so if you need it, think about how to develop it. If you're able to cash flow based on what you did in the summer, then you're good. But if you're struggling through the winter months, that's telling you that either you didn't price things correctly in the summer, you didn't sell enough in the summer, your expenses are too high somewhere, or you just need that little extra to get through the winter. Or, so think about that, what you can develop in the off season. So determining if you need to change your product in some way to meet your demand or increase your ability to supply. So we kind of talked about prior, if you have an item that has this very specific ingredient, maybe you need to change the product. Maybe you can change it in a way that doesn't change it too much. People don't really notice, but it's good enough and they're buying more of it and it's costing you less. So you may always need to look at that. Like, what do I need to change? Because, and who are you serving? Your demographic changes over time. And so you always want to make sure that you're supplying to the people that want to buy your stuff, what they want to buy. And it's not always what you would want to buy. We sell stuff that there's stuff that I would never buy that we sell at our place, but people buy a lot of it. Not my thing. And it's fine. They're great. It's just not my thing, but we sell them. So I just put them out there and they go. So like you have to kind of watch, your customer base and see what they're asking. If they ask you for something, don't say no and get offended because you think they don't like your product. They're asking you to sell them something to give you money. And this happens a lot too. People get kind of hung up on, especially in restaurants. Like, my food is good. Why are they asking for this? Well, they're asking for it because they think your food is good and they want you to make them something else. So kind of keeping an open mind sometimes and listening to what they're asking for is not coming down on what you're currently selling. They're asking you for more. They're asking you to give them something else. And so we always had this saying at the SPD, like, learning is earning. So if you're willing to learn, you're going to earn a little more. So just keep that in mind and keep an open mind, because that affects your bottom line and your cash flow as well. Staying on top of receivables from your customers. So if you gave somebody 30 days and it's at 30 days and they haven't called you to work out anything else, start calling them. Where's my money? I need to get it in, because you have bills to pay. You've already paid them. Some of you may not work on terms. I realize that some is cash business kind of rolling in. But if you do stay on terms or give terms to your customers, make sure you stay on them and stick to them. Understanding your cost of goods sold. Do you know right now, if you run a business, what your cost of goods sold is and what it's supposed to be? If you don't, you want to look into that. What your profit margin is supposed to be. We talked about looking at those industry averages. Maybe you have a system where you're setting up a cash reserve. And that would be something you'd work with your accountant about, maybe saying, how much money can I set aside, get my taxes paid, whatever I owe, and have some money over in a savings account. That way you have money if the weather is no good, it's going to happen. Or something, something other catastrophic thing happens, you have some money just to help pay your bills. And I did put seeking out assistance. The SBDC, this is what they do. This is what I did when I was there. They have the ability, even if you're an existing business, to take your financial documents, should you have them, and kind of run them through some of their projection spreadsheets and kind of give you an idea of this is what it's looking like, and then it kind of helps you figure out like maybe what you need to change. And I will say this, there are times when something sometimes just doesn't work. It just doesn't, right? So like, and part of that is the changing technology and changing times. So there are products sometimes that you could be making and selling, and they're selling, and all of a sudden nobody wants them anymore, right? Horseshoes, how many people buy horseshoes anymore? Only if you have a horse for recreation, right? It's not something you need because that's not your mode of transportation. CDs, we used to have record stores, CD stores. It's all electronic now. Those stores went out of business. Though not ag related, it does happen where sometimes you're selling something that it just is not going to work anymore, just doesn't. And sometimes you have to recognize that and change and kind of move on. So let's go to the next slide here. And so just briefly, I'm just going to show you a few to finish up here. Some things that might help you figure out the financial health of your business. And so don't be overwhelmed by these. This is just a sample, but there are things called financial ratios. You may just pick a couple that you use all the time that kind of shows you the financial health of your business at that time. You can look up financial ratios. There's whole bunches of them. Read about, so like I just pulled a few like common ones. So the net income margin, right? How much of your income is used up by expenses? So maybe that's something you want to run every once in a while, every month, every quarter to see what's going on there. And you can start comparing. You can kind of have this list of financial ratios. This is not really upper level accounting. This is very basic math. You just have to understand what you're looking for. Maybe you bought some big piece of equipment and you want to understand if your income is being supported by that asset, whatever the piece of machinery is that you bought. So like if you used to make ice cream by hand and then you bought this big, huge ice cream machine and your sales are still the same, but you got this big loan now on this ice cream machine, you didn't really do yourself any favors. So that's the kind of thing that would be looking at. So we won't necessarily go through all of these, but just be aware that financial ratios exist. They do tell you something about your business, and ultimately you can use that to change your cash flow by changing your expenses, changing your pricing to help kind of move that cash in and out of your business better. I also pulled here, these are very basic. So this slide kind of just shows you a profit and loss statement, balance sheet, and a statement of cash flows, which I would say are probably the three basic financial statements that business owners should learn to at least understand and read. Again, this is not accounting level stuff. If you run QuickBooks, they run these reports for you. Based on everything you put in, you can run all different kinds of reports. You can do comparison of years. You can do, which some people, this is one too, you got to learn is accrual-based versus cash-based. They'll run those reports as well. So don't be overwhelmed by this. Try to learn to figure out what your business needs, like what you need to see to learn if your cash is flowing in the right direction. So I know we only had about an hour and I tried to leave a few minutes for questions. So does anybody have any questions that we can answer about any, or I can answer about anything we talked about today?
We have the chat box open, so if anybody has a question, they can drop it right in the chat box.
And again, please at any time, if you do have questions following this presentation, reach out to us here at Extension or Shelby directly. And we're happy to facilitate those answers for you. I was happy to see Shelby express the importance of having those financial statements. Our next program, which is set for 2 weeks, will be covering those financial statements, and we'll be breaking down the importance of them and how to utilize them when making business decisions. I'm also going to put in the chat some information, including the registration links for 2 in-person upcoming events that we have. One will be focused towards agribusinesses, and the other will be focused on value-added producers or businesses that are not within the agricultural sector. So those are in the chat. Feel free to register for those. And I do see we do have a few questions.
All right, so I think, let's see. I can see a question that says, what should I have together to go to the bank to ask for money for a garage? So I'll answer that. The Small Business Development Center, who's sponsoring this with Cornell Cooperative Extension, does provide the service of creating a business plan with a set of financial projections. You will sit with an advisor. They will have a worksheet. Typically, they'll ask you a bunch of information, and what will be put together is really a cash flow projected. So it's not an actual cash flow, but it's projecting your cash flow based on a lot of the things that I talked about today. So if it's a garage, I'm assuming it's a car repair type garage. They might ask you, how many cars a day can you repair? What is the average cost of a repair? What's the expenses associated with that repair? So how much you're actually making, and they run that through onto a projection. And then included with that would be a narrative, a business plan narrative that just explains what you're looking to do. And that usually would go in with your bank application. And it gets reviewed by their commercial or lending office. And if they need additional information, they'll tell you. If they don't like it, they'll tell you. And I have honestly written business plans where they've taken them to one bank and the bank doesn't like it, and they've taken the same plan to another bank and they like it, because you just don't know where the bank is in lending. They can only lend out so much money a year. And so as you get closer to the end of the year, they sometimes get a little pickier about where they're lending money. So that would be a first step, is to, so the next question I see is, how can someone make an appointment? So the Small Business Development Center is located in the Thinkubator down on Broad Street. It's associated with MVCC, but the SBDC offices are independent offices that are always located on a SUNY or community college campus. So depending on where you live, you can go to the SBDC website. You can see the map, and it will tell you what's the closest office to you. Excuse me, the local office, who services Oneida County, Herkimer County, and parts of Madison County, is on Broad Street, and they would work with you down there. If you go to the Thinkubator website, Otsego County, I believe, is handled by the Binghamton office. So you would want to go to just go to the SBDC website, and there's a spot on there that will shows you all of the centers and which counties are handled by which center. Because they do it by county, because usually if you live in that community, you have a better understanding of what works in that community. You have, you work with the bankers, and the real estate and that kind of stuff. So, and you're welcome. Yep. Just check out the website, and I believe Binghamton or one of their satellite offices would be who you'd want to work with. Any other questions for today? We good?
All right. If we don't have any more questions, we'd like to thank Shelby for joining us today and giving a great presentation about cash flow management. We'll continue on with this series. Please feel free to attend series videos that you feel meet your needs, or you can continue to attend all sessions. Again, today you received a reminder an hour before that will happen each week that we are hosting a session. Again, we are hosting those 2-day series, and we hope to see you there. The webinar has been recorded, and we will have that available for participants that would like more information or to come back and rewatch the webinar. For additional questions, you can reach out to us at Extension or the SBDC. Thank you for attending, and a survey will pop up at the end of this webinar.